Well, we have a lot of moving parts out there on the S&P. What really bothers me is this bar and the inability to get through it, even with some good earnings out there. If we mark this off pretty closely, you can just see it right here, right? So what we're doing, we're going to open this up. We have some earnings to talk about, but this is really becoming an issue. And I'm not sure why it's becoming an issue, but we're really wedged in here between that 58.93.75 and 5800. Let's just say 59 to 58. When we try and get out of there, we're not able to. Now, what is really the larger issue for me and the larger problem is that hit rejected. But see this bar right here? This is what we refer to as a control bar, very similar to this. And then what we're doing is we measure this bar coming across. And the purpose of measuring this bar is to see what it encapsulates. So if I start encapsulating, let's say 5 days, I start actually becoming a control bar. So what we've done here by encapsulate means as long as I'm in the body, I don't care about the wicks, the bodies. But if I take out 1, 2, 3, 4, and I've got the majority of this, you could say that this bar is in control and this bar is red. Now we have some movement after hours that might change some things, and we're gonna have to talk about it. But I do wanna just point this out. Now, if I just drill into this on an hourly, you can see what we're dealing with. And this is what I really don't like. And this is why control bars bother me so much. See how we acted from 12 o'clock on? Usually it's the end of day buying that we're getting. And we're not getting that end of day buying anymore. What we're getting is if we start really looking at this, again, you can see right here, 1, 2, 3 into the close, we just have selling. It's very different than what we had Wednesday where you had buying and then just watch how it comes in. And you see you have buying. You're not getting that anymore. So you're seeing what I would refer to as it's nuanced, but it's there. We're getting a change in trend in the S&P. And I'm not really crazy about it. We did see some earnings after hours. We will discuss that. And we're recording this before the conference calls because I do want to present some information that I think is pretty timely for the people that are trading this, so we'll keep it short and sweet and get to the point. I'm not crazy about what I'm saying, and there's some other stuff here that we should go over. Let's start here with the NQ. What we're seeing is this kind of just not real big movement. Here you are at 9 o'clock. You can see how you just rallied, and then all of a sudden what? Tuesday? Okay, great. And then what happens? We open, we fall out of bed, and what is it? It's called straight down. It's not a pattern. It's straight down. I see straight down's not a pattern all the time, but look at what we're getting. So then we have this wick here, right? And then on top of that wick, we have this. See that right there? See how we're setting up and we just crack this? Again, I'm not really crazy about this, so it's definitely on my radar. And we have some technical breaks in some sectors that shouldn't have broke today, but they did. And it doesn't make me feel warm and fuzzy at all. If we mark that 15 that we've been talking about, we slice through it like a hot knife through butter after picking above it again. But is this the be-all, end-all? Well, I don't know about that. And we'll cover some earnings here. And again, I want to keep this one super short so that there's a lot of data in here that you could still use later today. That'll be timely before the market actually closes, the post-market 8. But if you take a look at this, make sure you subscribe to the channel. I'm going to try and do this more during earnings so that you guys have some data that you could work with. But if you take a look at how this is playing out right in here, just look at this and you're getting wedged in. Rising wedges do usually end in tiers. And I have a mini one here that we've tested. And then I have a major one here. And I say that they end in tiers for a reason because they do. Now, historically, this time of year, seasonally, this is supposed to be a great time of year. And this is a really good report put out there by Goldman. I really like it because it just takes the seasonal composite out of it. But July 1st through December, and you look at 1928 on. So anytime I have 100 years of data, I look at it. Historical data, when I have something that's greater than 30, there's statistical significance to it. That's when you should be looking at this stuff when you have 30 or more data points. That's when there's statistical significance. And you can see from this is where we are. They're highlighting it for us. And you can see from here how we move. But that doesn't mean that every year does this. We just blend. And it's possible maybe we got a little bit ahead of ourselves with the election and what people think the outcome is going to be that we just haven't even seen yet. Now, why this looks like a huge move, what I would suggest is just look over here at the composite. And you're really looking at it from a 0 line all the way up to 102 is where they're saying that you're at 106. So they're basically saying that the composite tends to move over the past 100 years about 3-4% into the close from here historically, and that this is usually the bottom. Again, they're blending. So out of 100 years, this is what's happened. So if we look at this, it's not great. I'm going to clean this off, and I just want to show this level once again. And I'm really hammering home the same things over and over again, because you can't make this up. We all remember this July 11th date, and we always want to focus on those levels that we just don't seem to be able to get over. And this level, for lack of a better term, is a pickle. We cannot get over it. I don't know if the kids say that anymore. They're going to start. They're going to bring back pickle. I can tell you that right now. But if you look at this level right here, what do you say? You see that area where you just can't get over it. Why? Because that's the level that they want to sell at, and it is what it is. Now, whether that's that tying into the Qs and we don't want to see that 500 ever again and we're going to constantly reject it, I don't know. I don't know if it's tying into that or not, but it's certainly there, and we can certainly see it over and over again. So let's focus on that level, and let's focus on some other things here that are becoming, in my opinion, absolutely glaring before we go any further. But I do think that some of this stuff is definitely worth talking about. And I was really surprised by this one graph. So we can see how gold just continues to grind and grind and grind no matter what the cost. It just keeps on rising. We had a little control bar right here, held, and then it just built up over it, popped over it, and just kept on moving forward. There's a reason that they're suggesting that this might be the case. Goldman had a little report on it today. I think it's worth sharing. And this was their note. While gold price to rates relationship remains intact, the fivefold increase in our nowcast of central bank demand in London OTC market since Russia invaded Ukraine has reset the relationship in levels. So I think it's kind of interesting, the fivefold increase in our nowcast central bank demand. So central banks are just buying gold. And based on our findings, fears of a U.S. financial sanctions and shocks to U.S. sovereign debt explain central bank gold buying well. We assume that the monthly central bank purchases will moderate to a third of the average pace observed in 22, which remains structurally higher before the freezing of Russia's reserves by the end of 25. This assumption boosts the end of gold price by an additional. All right, now this is where it gets super interesting, at least to me. If gold is going to be an issue, great. If it's not going to be an issue, then that's fine. But if you take the 10-year real yield and you look at the inversion of how this splintered from here to where the gold price is, and you draw the line of when they froze Russia's central bank assets, and what's transpired from here, I think that's absolutely fascinating. So what does this mean? It means a couple things. Number one, how is this going to play out in the future? So we've seen this huge rise in price, right? And as that price rises, it's of interest. And then we see, okay, well, that's because of this. That's the correlation. And it is central banks. Central banks are buying the living heck out of it. That is very clear to us, and we're seeing that left and right, okay? And so there's not really any way that we're going to say that's not the case. It is the case. They've been buying it, and so have other central banks as well. But let's just play devil's advocate for a second and think about the current election that's going on. If we have the status quo and we have the current administration stay in office with the current policy, then we're going to see gold prices rise. Now, and the reason I'm bringing this up is it's contrary to what we think. We think that hence Trump in office is supposed to lead to more inflation. Whether or not it does, we can debate that, but that's what the pundits are saying. And let's just go with that. Let's just pretend that that's the case, right? We're not going to debate it. But if that's the case, then we would expect gold to go higher. But the issue really here is, if he gets in office, one of the big things he's focused on is having these wars come to an end. So if he brokers something or starts to force Ukraine's hand through holding armament, whatever, and again, I'm not interested in your policies and your politics, I'm just simply stating from the gold price, then does Russia stop buying and their central banks stop buying gold so much? And if they do, does that mean that gold prices are going to drop? Or are they going to do it because now they're aware that this could happen again should they do something? I think it's interesting. I'm going to be interested in your comments below on that and how you think that could play out, because I find this fascinating. I knew that central banks were buying it. I didn't know at that kind of clip where you're talking about a 5x level difference in central banks. I didn't know it was that great. Now, in regards to what is concerning me, I do think that AMD was bad. And I do think that the free cash flow, if I was a shareholder, yes, that would scare me. So you have a lot of people that got hurt today on AMD. And after hours, we have some that are up precipitously and then some that are down. What's bothered me after hours before I even get to it is some of these reports are really good and the stocks aren't lifting. The ones that are lifting are the shorts. The ones that people are short that are actually bouncing. And that is troublesome, and I'll get to it. But from my perspective, looking at this, I get it. It was a really bad report. So you're going to break the 22, the 12, the 55, and now you can't get over any of them. The larger issue for me was this. So if I take a look at the SOX and I look right here, you're sitting right on that level, closing at the low. Well, that's not really where I want to be. And I think it's important. I had a trade on this, a swing trade, because I thought we'd bounce off of this. Now, we didn't break yet. And after hours, you did get some good semiconductor news, which we'll address. But you're sitting right there. And I don't want semis to start closing over or under this line. So if I go and take a look at it for a second, this is where we close. And we haven't really closed under it since we got above it. And closing under it, test, retest, I don't want to go through this again. I really don't. And this is becoming a concern of mine. So if we lose the SOX, what do we have? And then you go and look at IGV and you're saying, okay, well, we hit new highs today, but then we reversed. And this boils into what we're starting to see after hours. We had Microsoft, and Microsoft was good. Now, Microsoft is up a little bit. But this was a solid report in cloud beat, and for time's sake, I'm not going to get into it all. We'll cover some of this on Saturday's video. I just want to get these out so that you can see it ahead of time so you can still able to do something with it so this doesn't get out too late. And of course, you can always look at the time here and see that this is going out before these earnings calls. That they can move differently because of that. But this was a decent, solid report and raised guidance. Meta raised their numbers considerably, and the stock did nothing, and it raised them considerably. So I have this equation, and it's really simple. The way I always look at it is if I have like solid earnings, or we can call it, aggressive beat, or let's call it beat earnings would be a great way to look at it. Let's go back in here into text. I'm not gonna have time to edit this, but beating and raising guidance, and then take that plus sells off sentiment. And when you see that, I don't have time to edit all this out, guys. You're just going to have to roll with me. We're just going to have to bond. When you see this, your antenna's got to go up bigly. And I spelled negative. We're going to have to deal with that too. So what we're going to deal with is just, I don't have time to edit these. I'm in between the trading and everything else that I do. And then I have conference calls tonight. But I did want to get it out. When I see this, my antenna goes up big time. Because if you're doing this, good news, what are you going to do on bad news? And I covered this exact thing this morning, on MSTR. And you can see MSTR was down 10. It was actually down at 218. We had a nice trade. We'll show you a couple of these trades after hours and how we did them. But the important thing about this is I walked through this because you could tell that this was setting up, and I'll show you how. So what I did in the pre-market, and you can always watch the pre-markets, we saved them. But if you take a look at MicroStrategies, and then you put Bitcoin in here, and the point that I was making at is there's only three things that anything can do. It can either go up, it can go down, right? Or it can go sideways. That's all you can do. And so what you started to see yesterday was this. And you started to see it right here Tuesday morning. And what we did was we tried to rally, okay, and blue is MicroStrategies. And so Bitcoin was going up. And while Bitcoin was going up, MicroStrategies was going down. So if you ever own something like a commodity, whether it's gold and it's Newmont Mining or copper and it's FCX, and the underlying asset is going up and your process, whatever it is, whatever your product is dropping, you're in the wrong product and you're on the wrong side of the trade. It's very simple. If the underlying asset is going up and your stock or whatever you're trading is going down and you're betting that way, you have a problem. They're not going to catch up to you. You don't realize what happened already, and they're about to show you what's going to happen. So way to look at this is this. If you have a derivative or you have the underlying commodity, let's look at it that way, then you can either go up, that commodity can either go up, that commodity can either go down, or that commodity can go sideways. That's all it can do, right? It only has three options. If your stock is dropping when the commodity is going up, then it's sure as heck going to drop when it goes sideways or going down. So out of these three options, door A, B, and C, if you're just to look at that on a percentage basis, the chances of this going down are significant. And we went through this morning, the pre-market. That's why I always tell people, if you can, just tune into those pre-market lives. We do them every morning around 8:15. And what this showed us was very clearly that there was an issue here. Now, we looked at shorting this. I tried it a couple times today. One worked well, one just really didn't. It was kind of boring. But a bunch of people stayed short this after hours, and they did quite nicely with it. I actually wound up buying stock. I'm going to show you a couple trades here in a moment. But for me, why? Well, I just got to a level that it was just exhaustive. They came out and said we're going to issue billions and billions of dollars worth of equity because we're going to go out there and we're going to buy all this Bitcoin. And again, for me, I just always look at the key levels and say, okay, what are you doing? You can see that key level right there at 227. You might want to watch these tonight, okay, because these levels, they're pretty significant. All right, and you're going to watch when we open this up how they hit these levels. And I was watching that 220 level, and that's where my stop was, but there was another spot right here as well. So once you have those marked off and you know where they are, you can just see that and just look. You fought here, fought, tries, fought. So you always mark these off, and then that way in that battle, when they start holding those levels, you can start seeing what's going. I mean, there's your doji. I actually bought here, did okay for like a minute, pulled something out, got the reversal out, and then from there we entered down here and did quite well with that trade. And at the time of this, I'm still in it, but not fully. And I'm trying to get out right around that 240 level. There's a level right here, and I think maybe I'm splitting hairs a little bit as we're talking. But that 240 level is definitely a stickler. It's certainly something that I would be paying. And I would definitely pay attention to that and go from there. So the next thing that I would say about this and where I would focus with it is the following. Does this stay down? I don't know. It sure doesn't look like it to me. I would watch these levels that I marked off. I'd watch this flag that's forming. They did their conference call. It is what it is. Everyone's like, oh, they lose money. These are all write-offs that he takes against taxes. It is what it is, guys. He still owns a business that does $500 million. And so instead of paying taxes, he just found some way, I guess, to write off what's going on with Bitcoin. I'm not really sure how he does it. I shouldn't be that cavalier with it, but it's pretty obvious what he's doing. So you're going to want to watch this tomorrow. I think it's going to be really wild. You're going to have a lot of people that are going to, sell down on this. And you can always watch those levels. Now, for our opinion, the other thing I really want to stress is something that I constantly am preaching, and I want to just show you this. If I take a look at Meta, the one thing that I always do, and it works, and I mean always, I wait and watch that first bar. And I thought that this was an excellent report. And I'm really surprised that you're down. But I think that the sentiment's changing a little bit on the market. You're going into Tuesday, Wednesday. People are concerned. Tomorrow we get GDP. So you're getting people that are feeling a little nervous. And then you have non-farm payrolls on Friday. And again, this was solid. Maybe someone can point out the holes in it, but maybe it's those stupid glasses, but nonetheless. So all I did was mark that off, and I always talk about these anchored VWAP trades. The moment that this happened, I'm in. The moment that closes over, I'm in. And then all I'm doing is watching the previous close, and as it's trading up, I'm trimming into it, and I'm trimming into this area. Once it breaks to the downside, see, I'm trimming, and then when it gives me confirm, then I'm getting out. That way you get positive slippage. And then my stop goes back to break even on the rest. And then when it hits, that's it. I'm out. Here, take a look at this. So it just starts simply in here, and you can see the timestamps on the trades and everything. And we're starting to see it try to get over. So I'm waiting for that close on a 1 minute. That's all I'm doing right here is waiting for that close. And then I'm not getting it, and there's my spelling, and my spelling's off because I'm trading and typing. The guidance was absolutely huge. Revenue's 45 to 48 versus 40? And I'm not getting it. So it means that I'm missing something, or I want to put the brakes on until I see it. So I'm not touching it yet. I'm just watching it. MicroStrategies was interesting. Just spelling again. Bought it. 220 stop. And I think that's important that you note that not everything it works the first time. And then I'm watching right here, and I'm watching Microsoft, and I'm like, okay, that's interesting. And you're flipping VWAP in there. And that's actually at the time of recording this holding VWAP. And I think that's important. Next, Microsoft's pushing, and what are we doing? And we're looking at those levels on MicroStrategies. How low can it go? 212, 209. I'm going to try again. Back in MicroStrategies, I make a joke because I'm funny. Trimmed up 6. Oh, by the way, you're going to want to watch CVNA. And we'll get to this. I'll show you what's going on. But they're hosed. They're absolutely hosed. Those shorts, they're going to get short squeezed tomorrow. They crushed. And you're watching Microsoft. And again, what are we doing? We're just watching that VWAP, and I'm just posting charts so that people can see. And I don't see the development yet. And as I'm not seeing it, I'm just waiting, and I'm watching them buying Microsoft. They're selling that. KLAC beat, which is kind of funny. And then the MSTR that I bought, I was up $10, trimmed, moved the rest. BE means break even. Thank you very much. Microsoft, I'm still under at the time of recording this. Meta, I like a lot, and CVNA chose violence. But let's get into this. Bought Meta, 427. Why am I showing this? Because it's the exact thing that I keep preaching to you guys if you want to trade after hours. Same thing I preached on Saturday that I really wanted you guys to get, okay? When you're flipping up over here, all right? When you're flipping like this, I wait for a confirmation, and I'll show you why. See how in here you didn't, and here you didn't as well? I can do a whole video on this if you are really interested, and it does matter. It truly does. But what you're going to see is once you close over that, now you're good. You can mark your stop down here, and as it's trading up, I already know where my target is. So then I just keep going there. Very simple VWAP trade, up $7 in 2 minutes? and then right into it, we're selling. And then we're just watching it. I'd watch the CVNA tomorrow. But I think that's a really important concept. And then I know where my target is. So I sell into this because what it does when I sell into it, I get positive slippage. I'm not waiting for this nonsense, okay? And that makes a big difference on your trades and your portfolio. And just to go through this, I really am surprised. Hood was not great. Coin was okay, but it's such a crowded short that it doesn't matter. You know, they can miss and be a disaster. It's going to go higher because everyone and their sister's in it. But I didn't think Meta was really that bad, but it cannot rally. Microsoft, I think we have to see what they say on the call. I thought that was pretty good, though. I didn't think it was that bad. And I'm just going to go through some of these others. But CVNA, that crushed. I mean, crushed. And I think they're going to squeeze the heck out of people. If you're interested in more ideas on how to do certain types of price action, watch one of these two videos. That's it.